Welcome back to this session. Here we are going to cover reversal patterns where we are largely talking about engulfing and the hammer and inverted hammer patterns. So what is a hammer? Hammer is just a type of pin bars which we have covered. So now why we are talking about another type of pin bar? So let me just clarify. There are so many names which have been provided to different candlesticks. So names like hammer, inverted hammer, then the hanging man, shooting star. All of these kind of candles are nothing but pin bars which we have already covered. Then why have they been provided a different name? That is because there is a different context to each name. So if a candle is going on the upside, if a trend is going on the upside, and at the top if you are creating pin bar, then it has been provided a different name. In the middle of the trend if it is making, then it has been provided a different name. But so we are not here to pass some examination where these definitions will be asked. We are in a practical world and we are going to understand what a pin bar is, and when that pin bar exists at the top of the chart or bottom of the chart or middle of the chart, what does that mean? We will just completely disregard all other names. So even hammer or inverted hammer, we are just calling it for sake of making it understand. We are calling it for the sake of making you understand about it. But you can just completely forget these names. So you need to just understand what is a pin bar and how it is going to help you. So now let's start. And after this reversal patterns, we will also see key main patterns which are used in the stock market and how we can make sense out of those patterns as well. So now let's start about what are the reversal patterns. So reversal patterns are not actually predicting a turn. They help you recognize when the control in the market is shifting. So when we say reversal pattern, it doesn't really mean that market is going up and after that it is going to go down. It's not necessarily that way, but we need to understand that market is going up. So now if we look at the chart, so market is going up, it is not coming down, but here the momentum is getting lost. So the shift is happening in the control of the market. So sentiments are now being controlled by different other forces. So earlier it were bullish forces, now these are the consolidation forces. So most traders try to catch reversal but end up trading a noise instead of real shifts. What generally happens if a trader who works on the short side means the trader who sells first and buy later. So they are making money first by selling and then after that they are buying. So that we call as a short seller. So suppose market is going up, so they would try to catch a reversal. He would like that he sells at a point which is at the top and after that market should go down. So that's the objective of a short seller. So generally what happens, a person is watching this trend, he wants to be a short seller. Suppose he sells somewhere here, he thinks that market will be now going down, but in the short term he is basically acting based on the noise. So this all, now we are in a range and we mentioned in previous lectures that in a range we get more noise. So all of this is noise in the charts. Once it is broken and there is a trend on the downside, then it is a clarity, but until and unless it has been broken properly, it is a noise. So you can see it was broken but again it went up, but after that finally it broke down. But here it is all noise. So generally most of the traders try to catch reversals but end up trading the noise, and that makes them bleed really. Now let's understand there are two types of high probability reversals. Now let's understand there are two high probability reversal behaviors. So we are covering those two high probability reversal behaviors. What are those? So now let's first talk about a hammer. So hammer is nothing but a pin bar. So this is a hammer and this is also a hammer. So let's focus on these two kind of candles here. So let me just अब मैं इसमें ना ढूंढता हूँ फिर बताता हूँ. Look here, this hammer. Now market has the context where it is going up. Now a hammer has been formed in between. But look at the hammer. So what happened? Market opened at this point but closed at this point. But before closing it went down. It tried to go down, but there was a buying pressure, so the buyers came here and the final closing price was finalized somewhere here. So that means there was a buying pressure. So this is the bullish hammer. We are not talking about hammer, inverted hammer, shooting star. We are not going to be concerned about those terminologies, but see the concept. So this hammer candle provides us a good litmus test that trend was going up and now it will continue on the upside. Suppose this was like this. That would have meant that market has now exhausted this trend and now wants to move down. Then we would have either consolidated or would have gone on the downside. So it would have been a reversal, but this is not a reversal. Now there is another example of the hammer. Now here we are going down. Okay. Now this hammer pattern, we mentioned that this hammer pattern provides rejection of the trend or the trend reversal, right? So there could be chance that we are going down here, right? Now we get this kind of hammer. So first thing is that it is a green hammer. So market was going down, but we have got a green hammer. So there is a possibility that there could be a trend reversal which might be starting. But if you look at another concept by simply identifying what has happened, market opened here, market went up, and after that market went further up, but there was a selling pressure. So that would mean that market is not negative because it has opened here and closed here. So it is in positive territory. But because market has fallen so much, so when market got a raise to this level, then there was some selling pressure again because there was selling momentum previously in the market. So they have sold it. Now another confirmation we are getting is there is a support at this level. Around this level we are getting the support, and from there exactly we are getting this hammer. So in all likelihood there are two factors which are supporting this hammer as a bullish hammer, and possibly one factor is saying that it could be a bearish hammer because there is a sell off which is coming from here. But sell off is coming because there was a momentum, and because of that sell off is coming at higher level. So now our strategy would be, if we beat this level, then our market will be in the bullish side. So this signal provides us that market might be going in a sideways way, or at least the trend which was on the downtrend side has been broken. So that is the first indication. Once this upper line has been broken, then we are expecting to go up, and exactly that's what has happened. Now let's just talk about engulfing one. So engulfing we have already discussed. So if an engulfing pattern has been made, that's a very strong signal that market has reversed. So market was going up. This is the engulfing pattern, as I mentioned in the last time video as well. After that market has been going down. Okay, so this has been happening here, and you can just recheck that again and again. In the last video we have already talked about bullish engulfing and bearish engulfing. Both work in the same way. So bearish engulfing I have already shown you, and now you can see. So this is a bullish engulfing pattern. So here after that we are looking at the positive sign. So now one very critical aspect which you need to understand. You need to understand that a hammer or engulfing pattern, when it is made, you need to see where it is being made. So if it is being formed in a middle of the range, so this is the range, and somewhere in between if we are getting those hammers or engulfing pattern, they don't have much of a value. They will have some value, but yes, they don't have much of the value as compared to the fact that when a hammer is being made at the top or at the bottom. So once we define a bottom, how do we define the bottom? When we see that it is in some support area, then it's a bottom. When we see it's at some resistance zone, then it's a top. If we are making those engulfing pattern or that hammer kind of patterns at the support and resistance lines, then it matters a lot. Now there is a very important aspect to understand here, and that is the confirmation by volume. What do I mean by confirmation by volume? So when we see the strong reversals, whether it is because of engulfing pattern or whether we are seeing that reversal pattern because of the pin bar or hammer, at that point of time there should be above average volume in the market. Then only that trend can be confirmed. So this is one way of confirming the trend. It's not absolute, never absolute, but it is one way of confirming that kind of trend, because real reversal. So that would mean when we talk about a hammer, if it has high volume, that means it is a strong rejection. Now let's talk about this one. Now consider this trend. This is going up, but this candle has formed a hammer, and this is a red hammer. So ideally, because now we are creating a kind of top, and now this is a kind of hammer. So once this hammer has been formed, we will see how much is the volume. So volume, you can see it's at least average kind of volume, and here you can see the average volume has been little lower, but this volume is little higher than the average one. And next day we will just get the confirmation, because see, this could be a positive one also, because markets may just shoot up. So what we will do, we will just wait for a day and have the confirmation. Now next day this candle is formed, and it is formed with little more volume. So combining these two candles instead of just one candle, and combining this volume as well, this is going to clearly identify us a selling opportunity. So hammer plus high volume, that will mean strong rejection. Now let's talk about engulfing also. If you talk about this trend, it is going down, but here this is an engulfing pattern, engulfing green green weed. So this is an engulfing green, so this is an engulfing green candle. And see here also, if you just combine this one, people were little circumspect about it, little cautious about it. That's why there is not much increase in the volume, but still this volume you see is more than the average volume which has been going on in the market in general. And on the next day, it is getting accompanied by, it is getting supported by higher volume and on the positive side. So combining these two is going to provide us a confirmation. So combining these two is going to provide us a confirmation. Okay, so this is the confirmation we have got. So now we have got clarity on the concept of hammer, engulfing, plus combine that with the volume data. So now just action for you, open up a chart and identify some reversal patterns, and now open up any chart and identify some of the reversal patterns, and then ask yourself, did price actually reverse or it continued, and try to give reasoning based on understanding, which we have done in this session. Now here is one professional hack. So many times reversal patterns fail because you don't identify, don't validate those reversal patterns. So when do they fail? So there is specific ask. So now there is a specific concept why those reversal patterns fail. So when I say reversal patterns fail, that simply means, suppose we are going on the upside. Now market has started to lose momentum. Now market has started to lose momentum here. Market has gone up and starting to lose momentum. You would be now thinking that it's a reversal pattern and now we will be going down, but it goes up. So that is a failure. Many times it happens. So many times it happens because prior to this, there is no prior strong move, and then there are no key levels which we are looking for, and then there is no volume expansion as well. So these are the three aspects because of which volume patterns fail. So a lot of more details we will be covering that in our premium course, and because that a lot of other details about it we are going to cover in our premium course. Now understand this, these are the theories which you need to have a live session. Now please understand, these are the theories which we are going to teach through our LMS modules, through free sessions, through premium sessions, but still it will require some kind of hand holding, some kind of live classes which we can have, and that is part of our premium course structures. So once you join that, you can ask live questions in the class so that your concepts get clarified then and there only. Now in this next video we are going to cover a lot of patterns. What are those patterns? There are continuation patterns, there are flag patterns, pennant patterns. So all of these patterns we are going to cover in the next video. So stay with us and happy learning.